Very excited to welcome back Alex King from Cestrian Capital Research and Growth Investor Pro on Seeking Alpha and outside of Seeking Alpha. Alex, always fantastic to talk to you. Welcome back to the show.
Thank you, Rena, and thank you for the invite. Always delighted to be on. Much appreciated. Thank you.
We've had Tesla earnings. We have a government shutdown. We have quantum and government and so many things to pick at and decipher. What are you thinking about most of all? What are you looking at these markets?
Yeah, mostly I'm focused on maintaining a Zen-like cast.
Good luck with that.
Yeah, but I think that's the thing right now. I mean, it's really easy to get caught up in the noise. There's a huge amount of noise. If you spend any time at all on social media, particularly X, you get buried, and it's really hard to focus on things that matter. It's hard to get a fix on, is the market in an uptrend or is it likely to roll over soon? It's really easy to get distracted by politics because, whether you are vehemently pro, vehemently against the current administration, that tends to color your own assessment of investment opportunities. And of course, that's not where you want to be. You want to be cold and distanced. So truthfully, my own focus is on that, which is just try and keep out of the fray and focus on, price, volume, and where appropriate, fundamentals, and just keep it really, really as cold as ice. I think that's the trick right now.
What would you say about the tech space right now that you're looking at in terms of the obvious players, this AI bull market that people are waiting for it to explode, other people are waiting for it to reach ever higher?
Yeah, I mean, clearly the top 7 stocks in the S&P are powering the S&P. And there's a great Howard Marks podcast out this week or last week where he basically opined that, well, okay, the Mag 7 are not particularly ridiculously valued, but the things that he worries about are the other 493 stocks. I think if you look at the AI boom, if you look at the unit growth, in other words, GPU shipment, server shipments, data center builds, the kilowatts of power provisioned, that's all going to keep going up. I think we're early in the demand cycle, and we're sort of at the stage where lots of companies, large companies, have started to adopt AI. They've dashed into it as they should, struggling a little bit, I would say, with use cases, struggling a little bit with the true economics. So which tasks can you use an LLM for and which not? Which headcount can you get rid of and which not? And any white collar employee at a large company is figuring out how do they take advantage of AI and not get swamped by it. So I think in the real world, it's early. It's very early. The technology is, when you first start using it, it's really impressive. And you don't have to be too far into it to realize its limitations. So I'll give you a very simple example. We obviously produce, a ton of earnings analyses. And what we would love to do is have an LLM, the minute earnings printed for any of the companies we cover 50 or 60 stocks, basically go and compile a custom spreadsheet based on how we like to prepare the numbers, and then say, hey, the spreadsheet's ready, now you can write your thing. Not enamored with the idea of AI actually writing the stock analysis. It tends to be too generic, but it should be able to fill the spreadsheet. And so far, I got to tell you, it just doesn't. So we tried many tools, all the big LLMs and some niche tools as well, and it's still not there. And so for what you would think would be a relatively simple task, which is go and look at a press release, pull some SEC reports from the web, and compile a spreadsheet which looks the same every quarter, it's still not there. So it's early. And again, in the real world, we're probably going to enter the trough of disillusionment stage soon, where people get frustrated about what it can and can't do. And very often in technology cycles, that's followed not too far behind by a drop in valuation multiples because excitement about technology falls. So, I'm old, as is obvious. So I've been here for, the dot-com boom, the mobile boom, social media boom, all of these things. And they're all basically the same, which is everyone correctly gets all excited about a new technology, bids the stocks up, reality lags for a while, the stocks fall back, reality quietly catches up while the stocks are on the floor, and then all of a sudden people wake up to them again, and the mainstream wakes up to them again, and then the companies and the stocks take off. So I have no reason to suspect that the AI cycle will be any different. If you look at the stocks right now, is Nvidia expensive? It's not expensive based on its growth and its margins. It is expensive if you think it's a monopoly that a lot of folks are gunning for. And at some point, someone's going to succeed in deflating its market share, deflating its margins. So the trick with all these things, I think, is don't assume anything is forever. Learn to use stock charts. There's no more reliable measure of price than price itself. And just don't be swayed by a narrative. Just look at price behavior. If price is going up, well, then price is going up. If it's going down, it's going down. And just ignore the hype one way or the other.
We had Kirk Spano on from Margin of Safety Investing, and he
Yeah.
was talking about how the LLM model will be commodified at some point, and that will really change the investment thesis, or inherently it's a different investment thesis than people may think it is. What would you say to that notion as it develops?
Yeah, I think that's a smart insight. If you think about the LLM, I'm going to slightly tortured comparison this, and pure techies will pull me apart for this. But if you think of the LLM as a kind of operating system, and obviously it isn't an operating system, I understand that, but a kind of platform upon which applications can be built, then he's probably right, which is there will emerge two or three, dominant by market share LLMs, and people will write domain-specific applications on top of those LLMs. So you'll find apps for Gemini, apps for ChatGPT, and so on and so forth. So I think that's probably correct because the time to put huge dollars into building, training, nuancing a brand new LLM, that's probably in the rear view, at least in the current incarnation. One thing that interests me is if you think about the way that LLMs are built right now, the software design is what leads to this colossal compute and power requirement. So right now, to be very simplistic about it, what does an LLM do? It comes up with a pattern and it says, based on everything it knows about the world, what's the next value likely to be in that pattern? And it makes educated guesses. And it's a bit like in cryptography, there's a phrase called a brute force attack, and it's a bit like a brute force attack. You have to deploy an enormous amount of compute to make an educated guess as to what the next thing that's going to happen is. And I suspect that the thing that will change the cost model for AI, the thing that will lead to just a 10x reduction in power, a 10x reduction in compute requirement, is a different approach to the LLM. And what I mean by that is, if you think about two different people, a sort of formal, rational person and a very emotive person, a formal, rational person in a conversation will follow the conversation literally and will try to think about what is it that a rational response should be to the thing that was just said to them. Whereas an emotive person will tune into all of the cues and signs that are not in the words. And it seems to me that and they'll respond more fluidly, more naturally, and with less effort. If you're a formal, rational person, you come home from a day at the office much more tired than an emotive person comes home because it's been harder work for you. And I think LLMs are a bit like that. So I suspect that coming down the path at some point will be an LLM that's built on different methods, better understanding of the patterns that they're looking at. Stock trading algos are similar. We develop and sell a whole bunch of algo services, and they essentially do the same thing. They look at prior patterns and they try to guess what the next price movements are. But they're pretty computationally intensive. And at some point, the world's going to run out of power and compute, and the model has to change. So I think in the end, the thing that changes this bottleneck you're seeing, you just can't get enough power provisioned in the United States. It's not possible. You can't get it quickly enough to the data centers that people want to build. It's not possible. You can't ship enough GPUs quickly enough to the people that want them. So that has to change. So either AI falls on its face and just goes away. I don't think that's likely, or something changes. So I think that LLM design could change, and that would then not be a commodity. It would be a different kind of platform, or we could see much more efficient silicon and silicon programming software, by which I mean obviously the CUDA platform that Nvidia uses. So you can see Broadcom and other people gearing up to sort of pick away at Nvidia's market share. And, if ARM gets to play a part in that, ARM is much lower power by design at its core, has been for 30 odd years. And so that's another way I think where the current setup of vendors, the current setup of build-up could get deflated. So the thing I would look for is watch price in all these names. At some point, this roaring bull market will correct. Of course it will. That could be tomorrow, could be in a year, could be 5 years. I don't know, but of course it will correct. And so you have to watch for that. And secondly, if you look at changing the guard in vendors, Nvidia has been dominant for a long time now. All empires fail. And Nvidia will be no different. And when it comes down, when it comes crashing down, it'll be in the hands of somebody that delivers 10 times, I think, power performance. Traditionally in semiconductor, it was a 10 times improvement in cost performance. But this time, I think it'll be power performance because power requirements translates to total cost of ownership for the data center vendor. So I think there's plenty of stuff to watch out for. But I don't think one should convince oneself that because all these things are likely to come down the path, it's all over for Nvidia and all these data center stocks now, while the price is going up. Again, the price is going up. You have to separate price analysis from things that may happen in the future and just have those on your radar that might hit price in the future.
Any opinions you'd care to share on the U.S. government getting into quantum names?
I don't, to be honest. I mean, quantum, the stocks have clearly been on a tear, and it's a bit GME-like. There's a retail enthusiasm for them. They've been driven up on momentum alone. Yeah, that's fine. You can make a lot of money doing that as long as you know what you're doing. And they dropped a lot in the last few days. I made a little bit of money shorting those the last couple of days. I got out, thankfully, just before the government announcement because I thought, well, short gains in the bull market, they're usually ephemeral, so don't be greedy. And is quantum a technology of the future? Probably. The question is whether these smaller vendors, IonQ, Rigetti, all these D-Wave, all these names, whether they'll be the leaders, or whether your Googles, IBMs, Microsofts, whether they'll be leaders. And I don't know. I think that if you listen to the founders of those companies, that they'll all tell you that the quantum advantage is quite some way away. I know Google made some announcement yesterday about having found some quantum advantage. So I think it's one of these things where in 10, 20 years, we'll look back and go, there you go, those are the killer apps. But we're not there yet. And so I think that the stock prices, even if they're supported, let's say this federal government investment comes to pass and it actually happens, they'll get some support from that, as has Intel. But that doesn't change the fact that the prices are far, far above fundamentals. So, I don't plan to invest in any of those stocks personally. If they're runaway successes, that's okay. I can live with missing them. But the risk is, the risk of reversion to any sort of fundamental basis is so huge that for me to keep away. And congratulations to anyone that enjoyed the run up. It's been tremendous. But I think one has to be careful at these levels, will be my take.
Speaking of being careful, what would you say about Tesla's earnings this week? It had a bit of a drop post-earnings, some questioning about what's coming down the line and how much excitement there is to be had or how much excitement is warranted.
Well, I own Tesla stock. It's not a particularly large position, but I do own some stock. And I own it because I think they're going to merge it with XAI. And I think that's a sort of a no-loser scenario. Tesla as a car company obviously has challenges. Its leadership in EV, it's slipping. Federal tax credit situation is changing. You can't come up with Tesla's price based on any comparison to the fundamentals of the car or the energy business. But if you think about XAI, XAI is a pure play LLM business. And right now, most people can't invest in it. So if you merge Tesla and XAI, and I'm pretty sure they'll do this, then right away, you give the market a pure play, vertically integrated, this is how they will describe it, of course, a vertically integrated AI, robotics, LLM, and, probably Twitter's in the mix there somewhere, company to invest in. Well, most people can't invest in OpenAI or any of these other names. So I would imagine that will get some pretty successful capital markets marketing. And I think it's to the benefit of the stock. If you're an XAI shareholder today, you have some liquidity, of course. These high profile, highly valued private companies are not completely illiquid, but you don't have the sort of liquidity of a public stock. And so I think if and when the two companies are brought together, XAI shareholders get liquidity. They get all sorts of other securities that will be created based on the underlying common stock. And Tesla shareholders ought to get a re-rating based on the excitement of the new model. So that's my logic for owning it. The earnings of the vehicle company, I think, are somewhat incidental to the stock. That's okay, many such cases. So I think Tesla has a bright future, but I think it's based on a combination with XAI. That's my opinion.
Were you surprised by anything in the earnings or?
Not really. I think it's a pretty mature setup, Tesla and its shareholders. I think everybody who is a long Tesla shareholder understands that you're not investing in an auto business. You're not investing in an energy business. You're not investing in a, Optimus robotics business. You're investing in Musk, and Musk will succeed for as long as he succeeds, and then, like everybody, at some point he'll stop succeeding. But if you look at the discussion over the comp plan right now, so I voted for, and I voted my shares in favor of all of the board's recommendations, and it puzzles me as to why anyone would vote against, really, because I mean, is it corporate governance 101? Have your CEO capable of earning $1 trillion? Which is certainly unusual. But would you teach it in a civic ethics class? Probably not. But, is it a good idea as a shareholder to have the CEO highly motivated to get the share price moving up? I think it is. So I think Tesla bulls, Tesla holders are there for, the Musk lottery ticket. And Tesla bears, who've been bearish on the same point for a very long time, are of the opinion that, well, it's just a car company and a failing one at that. It's losing market share, the vehicles are old, where's the full self-driving, blah, blah, blah. And of course, they're correct on fundamentals, but, fundamentals are only peripherally related to stock prices. And Tesla, more than most, is not driven by fundamentals. It's a more mature version of the quantum stocks we've just talked about. So no, there's no surprises particularly for me. I think the stock has a bright future, but I don't think it's because of cheaper electric vehicles. I think it's because of an XAI merger.
Anything that you would say about what's happening between gold and the broader markets and this run that gold and silver have been having and the run that the markets have been having?
Yeah, I think gold's gotten ahead of itself, in my opinion. So for disclosure, I made some money on the way up in gold. We have an ETF rotation algorithm that we use that was long GDX and GLD for quite some time. So that did really well. And then I made some money on the way down in the last week. Again, I got out, I think 2 days ago, using the GLL 2 times short ETF and then the short AIU spot price ETF. Gold, I think, is a fear purchase. And the thing that made me take a short position, it only held for a few days, but did quite well, was the pictures of people in Australia queuing up to buy physical gold. I mean, this is just a complete overreaction. If you look at what's happening around the world right now, there is a reconstruction of the post-World War II world order. And the pieces will land where the pieces will land. Nobody knows. The actors don't know. The general population doesn't know. Journalists don't know. Uh, Political analysts don't know. No one knows. But it's changing. And so I think the gold purchase is sort of fear-driven reaction to that. People will say, "Oh, inflation," but there isn't any evidence that inflation is rising. More likely, inflation's cooling. The Fed's held rates at a pretty chunky level compared to recent history, not compared to long-run history, but compared to recent history. Fairly high level for some time now. There's some evidence of some weakness in the real economy. So I don't think that inflation is a big risk. I'm not saying it can't tick up, but the idea that inflation is going to moon, there's no data for that yet. You have, I think, a general worry driving it. And again, I think it's fear of change. So people will point to tariff policy or the China policy or Russia policy or any number of things that are unfamiliar to them. And there is a dash to something that feels comfortable, which is physical gold. And I think it's gotten ahead of itself. So, of course, it can go up. It could double tomorrow. Who knows? But I think it's premature. So, yeah, we'll see. But if you just look at a chart and a spot gold, I mean, charts like that can't keep going up at that rate forever. They just don't. Probably there'll be a reset and then perhaps another move up. I don't know. But I think this recent, dramatic run to the upside, that's a bit of speculative fervor. Another way to look at it, and again, in the spirit of staying ice cold, for anyone who has access to stock charts, you can do this within Seeking Alpha. Don't just look at the price, but look at the volume and try and look at the volumes transacted in gold futures or the gold ETFs up here at the highs. It's tiny. So what you don't have up at these levels is big institutional buying. You have retail and small momentum players buying. That's not evidence of a big rush to gold from the institutional investor base. If anything, if you look at the volume profiles, that happened some time ago, and I would expect them to be the large investors to be starting to take some profits around this time, or at least take some hedges. This sort of gold continuing its race up, I don't buy it personally, but we'll see. But that's my take.
You're not alone in that take, I would say. A lot of comfortable positions on that side of the aisle. Intel has been in the news a lot. Also, speaking of government help or intervention, we've got some government help with Intel as well. I know that you brought a semiconductor chart with you. If you'd care to share that with our audience.
Yeah. I'm going to show you the SOXX ETF. So This is not Intel specifically, but it's worth, with any single name stock, you always have to situate it within the overall market and also within its overall sector. So this is a slightly messy chart, but allow me to explain this. Get this on the screen now. Okay. Do you see that?
Yeah, I see it.
Okay, great. So let's talk about semiconductors, and then let's come back to Intel. So this is the SOXX semiconductor ETF. I like this ETF. It's pretty well balanced between the top vendors. SMH is another popular one, but it's heavily weighted to Nvidia, which means it jumps around a bit more than SOXX. This is the April lows down here, post-Liberation Day lows. So it hit a 148 low. We use a couple of different methods for charts. We use Elliott waves and Fibonacci levels, as do many, for guesswork basically as to where over a period of time might the stock or the ETF go to. And we also use moving averages as a matter of fact to look at them as tripwires on the way down and the way up. So this is the post-Liberation Day lows, I should say. So it hits 148 down here on April the 7th, which was the bottom for pretty much everything in the market. We then get the famous presidential tweet, great time to buy. Hopefully people took that as signal, because one thing I would say about this administration, like or dislike the administration, doesn't matter. You get plenty of signal from them. So this was a screaming buy point here. We got a big run up to 186 within a few days, a normal sort of pullback down to 162 for a way too low. And then we've just been in this tremendous run up for semiconductors from around the 22nd of April for, let me see, 6 months now. Yeah, 6 months almost to the day, where it's moved from 162 to right now 290, remarkable. And the question, I think, is at what point does semiconductor become a source of funds? Let me explain what I mean by that. If you're a large account investor, there are many ways to make money, but one way to make money is rotation. So, you'll buy a sector at its lows, and you'll wait for, or perhaps seed, some good news stories, have the sector run up, and you'll take gains at some major highs, and then go and put your money somewhere else. So at some point, when a sector's run up as much as semiconductor has, so again, I remind you, 148 April the 7th, 291 right now. When it's run up that much, you're going to see people at some point take capital out of that sector and rotate it into sectors that are not as run up. And so it's possible that we see semiconductor as a source of funds and enterprise software, for instance, as a use of funds. So basically capital pulled out of chips and put into software, because most of the software stocks, not all of them, but most of them are quite big now. Not unreasonably on fear of AI replacement and so on and so forth. So the big question with semiconductor right now is, I think, has this topped? Arguments why it's topped. Well, it's at a big Fibonacci extension. So for those familiar with the system, this wave three here is around about a 3.68 extension. That's a big move up. Okay. It also, on a much simpler level, it just can't really break SOXX. It can't really break 292 for any period of time. It's been trying since the 6th of October, and we're now on the 23rd of October. So for more than 2 weeks, it's been trying to push up for that level. It's failed. One daily close above it. And what does that tell you? Well, it tells you that's resistance. That's resistance right there. It tells you that there aren't any buyers of any size for SOXX over 292. So it could be that this is just consolidation. We'll see some sideways action and then another move up. That definitely could be. But it also could be that the sector is going to turn down. And again, not because it's the end of the world, just because there's plenty of profits to be had here. Time to take them and go and do something more interesting with them. So I'm watching semiconductor pretty carefully. And the way we do it is we look at these tripwires, these moving averages. The red line here is the 8-day simple moving average, green line, 21-day exponential moving average, blue, 50-day simple, purple, 200-day simple. And so very simple rule of thumb, it's not very scientific, but it kind of works, is, if the 8-day trips from above, time to have your antenna up and be concerned. So it's done that a couple of times, SOXX here. Green line, the 21-day exponential moving average, trips from above. Okay, that's time to be concerned. And my rule of thumb is 2 daily closes below that. Now, forget intraday, it doesn't matter, but 2 daily closes below that, that's time to be truly cautious. So it's time to maybe take profits, reduce exposure, hedge, something, but just, be careful. So I think semiconductor it might be rolling over now. Now, I've, thought that could happen back here as well, and frankly back here. So, it's run up very aggressively, but at some point it will roll over, and that could be now. So you have to be a little bit careful with chip stocks right now, I think. Now, if we talk about Intel, I'm going to stop sharing for a second. Okay. If we talk about Intel, I remember talking to you, a long time ago now, and saying, it was probably 18 months, maybe 2 years ago, and saying I thought Intel was a great opportunity because it should be a benefit of reshoring of semiconductor manufacturing back to the US. And that proved to be a great idea, but it was about 18 months too early. So it took a long time to come to fruition. But that is what you have now. You basically have, it's obviously not, it's only a 5 or 10% ownership stake, but it's essentially a state-owned enterprise in the way it behaves. And again, you can agree or disagree with this policy, but the policy the administration has decided to take is that if it's going to truly reshore semiconductor capability, it needs a vessel to do so. It can't just, hope that companies play ball. So you can see the China policy as regards Nvidia exports. You can see the domestic policy as regards the Intel capital investment. You can see its policy of getting third parties to invest in Intel. You can see Intel basically becoming a vehicle for US semiconductor excellence. Now, whether that all comes to pass in an actual operating business, who knows? The history of governments driving companies is not desperately good, as everybody knows. But can the stock keep running out for a little while? Yeah, it probably can. It looks like Intel's having some success with its 18 angstrom plant. That's the most advanced node at which it operates. It looks like, if only for political expediency, you're going to have lots of vendors coalesce around the idea of Intel fabricating their chips, and probably that has some upside for the stock. The fundamentals on Intel, we'll see what the numbers are when they print, but I mean, they're not going to be dramatically different. It's too hard to turn a company that size around quickly. It's not going to suddenly become a great business. It isn't a great business today. Growth is poor to non-existent. Cash flow is terrible. Balance sheet stretched. So it's not suddenly going to become, a wonderful fundamental business to own. But there's a good chance, I would say, the stock can run up further. Big question for me is, can it actually become the sort of business that people hope it can? Could it be a successful holding company, for want of a better argument? You have a venture capitalist as a CEO, someone skilled in capital markets operations. Could it be good at that? Yes. Could it become, once again, a really successful cash generative manufacturing and design business? That's a much higher hurdle. And so I personally wouldn't hang my hat on that. But can the stock go up? Sure, the stock can go up. Doesn't mean it necessarily will on earnings, of course. But if you zoom out a bit, does it have some upside from here? Probably yes.
Lots of shoulds and coulds in this market, right?
Yeah,
Yeah.
yeah, that's right.
Speaking of shoulds and coulds, I think that's a nice segue into the crypto scene. Investors and observers looking at pretty to very confusing market, wanting to park their money somewhere that they feel like might be absolved from some of the shenanigans that some people might be calling things. What would you say about the crypto space?
Yeah. Well, I was late to crypto, but it's been good to me. And I was late to it because
That sounds
I'm
like the
old, and
beginning of a country song.
I just passed my violin.
Yeah.
I remember when crypto got started, and I remember the Mount Gox episode, and the guy with his USB drive at the bottom of the municipal dump and all that. That looms large in my head, and so I avoided crypto, entirely until I could buy it with a BlackRock wrapper. And so I own IBIT, the BlackRock Bitcoin ETF. I own ETHA, the BlackRock Ether ETF, and I own 3 of the Ether treasury companies, being Bitmine, SharpLink, and Ethzilla. I think crypto has some upside in it yet. What do I mean by that? I think that when the market turns, I don't buy for 1 second this idea that crypto is a hedge against, well, anything really. I think it's it's the highest of high beta investments. And when you have a red hot market, it'll sky. And when the market turns, the next bear we get is probably going to be a pretty brutal bear because the bull's been so aggressive. Then you only have to look at what happened in 2022. And whilst you can wheel out an army of crypto, let's call them influencers, to tell me that won't happen, I don't believe it. I can't see any reason why crypto wouldn't dump mightily at the point where the Nasdaq is selling off half. I think if you look at the events of October 10th, and they're starting to be well documented, there's a fantastic newsletter by Molly White that you can find anywhere on the internet. It's on Twitter. It's no paywall. That just sets out in very stark terms what happened at the various crypto exchanges and why the immature nature of those exchanges and the lack of traditional securities infrastructure rules and regulations meant that so many people were wiped out, in conjunction with huge leverage that people had, and where if you run a margin account for securities, you have to pose US dollars as your equities, your collateral. But in some of these crypto exchanges, to borrow money for more Bitcoin, your collateral is also Bitcoin and lower order coins as well. So that was a big collapse. It is not really surprising. And question for me is whether it's really killed the golden goose in the lower order coins, because there is an awful lot of people on crypto Twitter, which is a very special place, who are of the view that, I'm done. I had what I thought was a lot of money. I now have no money and I'm never doing that again. So I suspect the intent of the sell-off was, your normal market shakeout. It happens in all stocks from, the most boring ExxonMobil to the most exciting, an altcoin. So nothing unusual there. I suspect the intent was something of a shakeout, get rid of some leveraged longs, be able to buy up at the lows. But because of system failures and excess leverage, people were hit very hard. What wasn't hit particularly hard is the spot price of Bitcoin and the spot price of Ether. They went down a bit. Bitcoin, though, held fast at the 200-day moving average and bounced right back up again, during that hour or two after the equities market closed on the 10th. And the other thing that wasn't hit particularly hard is the ETFs, the large liquid ETFs. So it has something like $86 billion of assets under management. ETHA, something like $15 billion under management. So they're big ETFs and they've sold off somewhat. But if you held your positions in those ETFs, you were fine, just a garden variety sell-off. So for me, the way to play crypto, if you want to do so, is to play it the way big money plays it. If to me, if BlackRock's ETF goes to zero, that's a big problem for BlackRock. It's more BlackRock's problem than it is mine. And there's a sort of element of safety there. So for me, for the remainder of this bull market, I think there is upside to be had in Bitcoin and in Ether. The lower order coins, I don't know. I saw Citadel today made an investment in a Solana vehicle. We'll see. I personally think that the top two names are the ones that have the best risk reward, put it that way. And at the point where this market reverses, I plan personally to be out of all those names, because I think it's just they're essentially speculative vehicles. We can get into the utility of Ether and tokenization, and that is a thing for sure, but that doesn't mean that the price has to stay up even if unit volume usage goes up. I can't personally countenance the notion that I have value held at a crypto exchange which is not subject to all of the US securities regulations, or I don't know if it's better or worse, but I know if I held crypto on a hard wallet, definitely an offline wallet, I definitely would be that guy searching in the municipal dump to see, where my crypto was. I know I would be that guy. I've always known that, so I've never done it. So the ETFs, perfectly good way to do it. And you know what? You can treat them like any other stock. You can, even if you want to, play long short Bitcoin. There's a BITO and BITI long short based on Bitcoin futures, ETF pair. All the things that you ever want to do, you can do. I don't really understand the need to go native crypto unless you are unable to participate in US ETFs. If you're outside the US security system, okay, that then you don't have as many opportunities. But if you're a regular US investor, you have those ETFs. I don't really understand why you go anywhere else, to be honest.
Alex, yeah. I really always enjoy talking to you, and I know our audience always enjoys these conversations as well. I mentioned at the start of the show, you write under Cestrian Capital Research. That's on the free site. Your investing group on Seeking Alpha is called Growth Investor Pro. I'd be interested to hear maybe some of the things you're talking about with your group these days.
Yeah. So a sort of dominant theme in subscriber chat and on, we do a live webinar every week, open mic, anyone can say anything within reason. A dominant theme is, when should one get out of this market? Has it run too far? And of course, everybody's worried about that. And so what we try to do is focus on, cold reality, price movements, again, not narrative, not, fear or greed, but just what is price doing? And we also try to do that with the individual stocks. And so we try and include really rigorous fundamental analysis as well as chart analysis. So if you look at, for instance, lots of these new data center plays that were Bitcoin miners, the stocks have been on fire, fundamentals, just aren't there. And so we always try to look at, well, know what you own. You can make a lot of money in these speculative businesses, but know that they aren't supported by fundamentals. So know that when risk goes off in the market, they're going to drop. We saw a little bit of that this week in the quantum names, and a couple of drone names and nuclear names and one or two other things. So we try to be really grounded in reality, watch price for what it is, watch fundamentals for what they are. Recently introduced some crypto coverage, so we've had success. Like a lot of the investing groups, you run these picks, which are basically swing trading ideas for us. So we had some good success with Bitmine Immersion. We have ETHA as a pick right now as well, which I think can do well. So crypto's been quite popular in it. Again, the sort of big money grown up version of it. And apart from that, business as usual. Been running it for a number of years, and we don't get particularly excited in a bull market or depressed in a bear market. There's always an opportunity to make money somewhere. We look for large account capital rotation in and out of stocks and sectors, and we try to highlight those for our subscribers. And so far, so good. Feedback from our members has been great over the years, and it's a popular service. Chat's busy, webinars are great. I enjoy them. So if anyone's watching, they'd like to try it out, please do so. It's not expensive at all. So we'll be delighted to see anyone there.